All right, ladies and gentlemen, our next session is Financial Integrity for a $10 trillion India, Building Safe, Compliant and Trusted Digital Rail. Our speakers for this session, I request you to please put your hands together and welcome Ms. Vasud Torsekar, Additional Director, FIU-India. Mr. Umesh Kumar Singh, MD and CEO, CERSAI. Ms. M Kumari, CGM, SIDBI. Mr. Prashant Sagar, OSD, FATF, Cell, Department of Revenue, Government of India. And this session is going to be moderated by Mr. G. Padmanabhan, former Executive Director, Reserve Bank of India. Now I'll hand over the further proceedings of this session to our moderator. So over to you.
Right, thank you very much. I know that all of you are waiting for a more important session that's going to happen one floor above, but let's try to do the best of the time given to us. Now that I have a very, I would say a panel which has seen these issues from different aspects, different angles, etc. So when we talk about the financial integrity for a 10 trillion economy and then talk about the data integrity, I would perhaps start by defining financial integrity, which is often described as a state of a financial system or organization that operates with hate. Now, what exactly do I mean by hate? Where H stands for honesty, A stands for accountability, T stands for transparency, and E stands for ethical standards. So this hate ensures that the economic activities are conducted in a trustworthy manner, adhering to the legitimate rules and standards to prevent corruption, ensure accurate financial reporting, and maintain public trust for the sustainable and equitable development. Where do you think our country and economy stand on these key parameters of hate? Maybe and could be a starting point to just ask the views of my elite panel members. Maybe can I first ask Vasud to go?
Good morning. Good morning, all the panel members. And I think we are just a little shy of good afternoon. So good afternoon as well. Financial integrity and the financial system. So past 10 years, we have seen a massive transformation in the payments landscape in India. We are seeing very fast payments. And these fast payments have been driven by financial products which are innovative. We see very fast, rapid innovation, and this innovation is coming from fintech sector primarily. But we also see a lot of collaborative development. So we see collaboration amongst regulated entities. We also see collaboration between regulated and unregulated entities. And a lot of new innovative financial products are getting developed. Of course, from the financial inclusion point of view and from the point of view where we do want to see India become a $10 trillion economy. However, these financial products also come with some amount of AML risk, and from the viewpoint of the organization that I am representing today, which is FIU-India, I believe that some amount of work needs to go into identifying, assessing the AML risk that is emanating from these new financial products, and how these products are being once a product is being identified as low risk, high risk, medium risk, what are the probable customers who are appropriate for a product of that risk classification. Some amount of thought needs to go into these issues, and that would go a long way in securing financial integrity. I think that is my opinion.
Thank you. good initial thoughts. Umesh, would like to go next?
Thank you, sir. Good morning, everybody. Good afternoon, rather. My thought is that we have a very robust regulatory and legal framework. So the pillars are strong. As mentioned by ma'am, that risk management is required to be reinforced, and accountability part at RE level. When they do KYC, somewhere they err, and that is why this risk comes into. For example, let me mention here the mule account. We have tools to check the spread of mule account. Only thing what is required is that some sort of reinforcing the accountability properly. Create awareness. The need of the hour is to create awareness among the staff member who are handling. Just like that, they should not onboard the customer. Our regulation prescribes risk management. So they should assess the risk. And RE should have guidelines in place. Going forward, I am of the view that some areas are still need to be addressed by the regulatory framework and legal framework, that is bringing into DNFPB, that is designated non-financial professionals and businesses, into the KYC ML ambit, and also the VDA, virtual digital asset. A lot of risk is coming in the system from there. If these things are addressed, I think our economy is robust, and in future, I think that vision can be realized by support of everybody. Thank you, sir.
Thank you very much. I think two things. Since you raised the issue of mule accounts, I think both Reserve Bank of India and NPCI are looking at mule hunting software, which is going to help a lot. And interestingly, the finance minister who visited these stalls asked a question: how do I get my money back if I lose it using the system? Probably the answer to that would be, I make sure that these accounts don't get the money, because once they get the money, getting back is difficult. So the idea is to prevent it. Kumar, you would like to add anything to this?
Yeah, sure. Thank you. Yeah, so thanks a lot for having me on the panel, and of course, good afternoon to everyone. Coming from the banking sector, I'll of course add to what Sir had asked, but a little broad basing of the whole aspect. If I just have to bring a few facts into picture, the so-called digital economy growing at a pace which will take it to perhaps 1/5 of the overall GDP in times to come, the next 4 to 5 years, and the fact that BFSI would play a significant role, it would have a significant proportion of this contribution that it would be making. So today, when we speak about financial integrity in the economy as a whole, I would say a bit of it, a significant part of it, will have to be contributed by the banking and financial services sector. And that's where the responsibility is higher. Coming to KYC issues and the mules part, while I'm not from a commercial bank side, but I would still say we are very much aware and alert to these issues. And there are, there is significant innovation going on this and how to control these aspects. Beyond this, what I would like to say is, when Sir spoke about the 4 elements of hate, accountability, hate, which is basically honesty, accountability, transparency, and ethical standards. As we are moving along in a banking sector with so many products and apps and etc., which are coming into place, things are evolving in a positive manner. We are seeing a lot of these 4 elements getting inbuilt into the various offerings which are giving to our clients. Just to make one small example, which is at a macro level, I'll just take to a minute more. When we speak about transparency, we had been having conversations on the Indian economy having a significant part on the informal side, cash-based, and so very, very opaque. There was one thought process of formalizing the informal economy and then bring in transparency. The thought process started with registration of the MSMEs. We actually deal with MSMEs, so I need to speak about it. That was at the core of formalization, but that was based on PAN as a core document. We know how universal PAN is. And so the formalization drive had its roadblocks. Then came the thought process of why not go back to the roots of all these digital rails, which is Aadhaar. And let me mention this to you, that SIDBI, along with Ministry of MSME, had set up, it had developed by itself and implemented a digital platform where we had taken up Aadhaar-based registration of very small enterprises, which are non-GST registered, which are across all the gullies, streets, etc. These kind of nano enterprises getting registered through their lenders basis the Aadhaar data. And today I must mention that over a period of 2 years, from nothing to we are at about 2.75 crore of MSMEs which are registered on this platform. And that, I think, is transparency.
Well, thank you very much. Very interesting thoughts. In fact, I think one of the challenges that most of the fintechs talk about is the challenges they face in digital onboarding with regard to the KYC. So whether we are fully solved for, I think we are taking several steps. I mean, when I was in Reserve Bank, I always used to say that when we push too much, what is KYC becomes ultimately KYD, where you know your documents but not your customer. So somewhere we will have to move faster in this direction. We'll stress test this a little more as we go along. But initial thoughts, Prashant, anything to say?
Thank you, sir. Thank you to the panel. So coming to this, as sir mentioned about mule hunters, I recently visited the RBI Innovation Hub in Bangalore, and I was quite impressed to see the advancement that they have done in the field, this mule hunter thing. And there is a subsequent project to Mule Hunter 2, where the banks will be able to share the data, and that will add to this whole project. Coming to this hate thing, maybe the choice of acronym has kind of a negative connotation. Maybe we could have gone for the HEAT acronym with the same letters. So that would have had a positive connotation to this financial integrity thing. So as I'm from DOR, I'll also go through this one by one. So coming to the honesty part of this, see, in India, we have always had progressive legislation which had mandated honesty and put up check and balances for the government officials in the system. But this should also, in a way, should expand to the corporate and the private sector. So in a way, the chase of revenue, the chasing revenue targets, and the short-term profits in some way take precedence over due diligence and prudence. So true integrity means doing what is right, even when it comes at the cost of business convenience and choosing credibility over commercial expediency. Coming to, I'm sorry if I'm like reading it out, but again, on the accountability side, our financial system and the institutional framework has quite a bit an accountable structure, which maybe in view of the upcoming technologies might need some improvement. That will be a thing that we'll have to keep updating ourselves to up to that. On transparency, we believe that in India we have something called compliance by design. The whole structure is such that each sector kind of become compliant overall. This whole compliance things come by the design of this whole framework. So I guess that is all, sir, from my side. Thank you, sir.
Thank you very much. I think all initial comments, thank you very much for that. In a lighter vein, I think in a country like India, I think we are less worried about heat, but more worried about hate. So that's why I took, so when we talk about the financial integrity, I think the data integrity becomes quite critical. And when we talk about data integrity, yesterday I had a detailed discussion with Mr. Saurav Garg on the issue of data as public good, right? Quite a detailed panel. He had many things to suggest, including the issue of how the government is now trying to achieve consistency, which is what we come across. So again, I would probably like Vasud and Kumari to initially explain about when we are talking about public data integrity, what is the position of public data integrity as far as our country is concerned, and whether the AI and the cloud adoption is going to alter this positively or negatively? Maybe one of you can go first.
I think it might seem that I keep coming back to the same theme, but data integrity. I would go to the original point that I made in the earlier question that as we are moving very fast and developing more financial products, so that they become available to all Indians, towards 100% or a very high financial inclusion. What I see is that financial literacy is not going hand in hand with financial inclusion. So I see that a lot of financial products are being made available to consumers who don't really understand. Of course, they understand the utility, efficacy of the product, but how can the same product be used as a weapon is something that they don't understand. How are they supposed to uh, how they should not be making information available to unauthorized person, how to even figure out that somebody, when they are getting in touch with them, are they authentic authentic representatives of the organization that they purportedly represent. So this is the kind of issues that we need to deal with. So financial literacy, public awareness on what kind of data should be made available to which organization, for which financial product. There has to be a lot of public education on this. A lot of data integrity issues in India are coming, data leaks are coming first from the consumers themselves. They don't understand the kind of personal data that they are making available to others. That is number one. Number two, there are several other places where personal data is shared and it gets leaked. So that is the second data integrity issue that I see, which personally I believe has got nothing to do with cloud or AI at all. It is the how data can be used as a potent weapon against the person to whom that data belongs. There is very less public awareness and public education on this issue. And while we are innovating so fast, there is not enough, I would not say enough effort. It is just that there has to be an effort to educate people in a way that they understand it. If we run advertisements on television, not everybody wants to listen to them. So I am maybe a little clueless on how to do it, but it definitely needs to be done. As far as, so I think on AI and cloud, I think, the thing is that as far as data integrity goes, AI can bring a lot of bias because, AI works on biases. It is a learning model. Ultimately, it learns what is being taught. So it can kind of introduce or strengthen, worsen biases from the data that is being fed into it. So that is one data integrity issue that I see. But of course, it has several advantages also, that it can help understand the customer. From business viewpoint, I can understand how it is useful also. As far as cloud technology goes, again, I would say that data integrity issues related to data localization would impinge on cloud technology, especially with data localization guidelines coming in from RBI. So and especially in the kind of world that we are living in, where corporations are expected to maybe respond to the sovereign interests of the country from where they originate. We are living in a very different world, where globalization was considered a public good. I don't know, I mean, maybe I don't know what percentage of world population today considers globalization a public good. Fast financial innovation requires very strong support from people who believe in globalization essentially. So I think.
I mean, very, very important points.
So I think how data integrity, because I am expected to depend upon certain global corporations to protect my data, and the corporations themselves are becoming, very powerful. I don't know what they do with my data. I don't know to whose interest they are responding.
So, I mean, very important point. I think, again, if I go back to my yesterday's conversation with Saurabh, one of the points I raised was that if I go for a medical checkup, and it's a fact that's happening, next day I'm bombarded with these medicines which are suggested to me for whatever thing. So that's a kind of, when we talk about data integrity, the important point that Vasud is making is that we have to talk about the data protection as well. And for the data protection to happen, there is a responsibility on the part of the people who own the data, who are giving the data, and the responsibility on the part of the people who collect this data and how they are sharing this data or not sharing this data. Kumari, anything to add?
Yes, on the personal data piece, yes, there is a significant risk. We also deal with the bottom of the pyramid kind of enterprises, very vulnerable, and yes, the risk is pretty high. And we do hope the DPDP Act will do something significant in this regard. But then data today, so much data is public, not because we have access to a huge amount of credit data. The credit data of the entire banking system sits in the bureaus, and that's very, very valuable information. Some of these are regulated at the moment. The bureaus are regulated. The payment aggregators work under a regulated environment. To that extent, it's fine. But I would still say it's up to the institutions to take care of the risk that's created by technology with technology. I mean, beat technology with technology. I'll just give a small example on how we at financial institutions think about the subject. There is this Trades platform, which I'm sure people would have heard about it. That's invoice discounting platform. It discounts invoices between buyers and sellers. There's a huge volume that's handled to the extent of almost 2 lakh crore of invoices per annum. That's the kind of data that sits on these platforms. And this kind of financing runs the risk of single invoice getting funded by multiple lenders. And that risk needs to be mitigated. And here comes the technology. We do have technology that can dedupe the invoices to ensure that there's no multiple financing happening. However, they need to be given access to data. And that's where there was a slightly different thought process, and they deployed a technology which doesn't use the data in absolute form, but it hashes the invoice data and stores the digital footprint. And whatever needs to be done is done on it. And this is the highest level of security and integrity of data. This, I think, needs to come in every repository of data that we use, we as lenders or anyone else as users.
Okay, thank you very much. Now, I think I'm conscious of the time, so I'm running a little quickly. Just to make a point on the data duplication, because data duplication also becomes an issue as far as the data integrity is concerned. Now, I think we have, for instance, duplication of data across Aadhaar, CERSAI, passport, driving license, voting card, ration cards, utility bills, all these are there. But I can tell you that for today's Prime Minister's session, the rejection came for the Deputy Governor of Reserve Bank of India 1, and for Chris Gopal Krishnan, whose face was not recognized when he tried to enter. So there are these issues which keep happening. Now, I think having said that, let me come to the more critical issue of the KYC, which is more important. I think CKYC was something which was established 2016-17, and Umesh, you are owning that. And it was envisioned that it will ease out the burden of repeated KYC across the customers. The finance minister also in the recent speech talked about revamping CKYC to make it single source of truth and to have a risk-based KYC approach. And this is something which is getting driven by the current RBI governor as well. So I think it'll be interesting between you and Prashant to talk a little bit about this again.
So, you rightly mentioned, sir, it was started somewhere in July 16, and now we have almost 80% of the citizen data with us, 107 crores. and they are, I will not say single source of truth, but yes, they are near single source of truth. Why I am saying so? Because every RE which is fetching the data or using the data from CKYCR is adding value by updates, enriching the data. So if my records are used by say 5 reporting entity or reporting entity from financial sector, entire financial sector is covered, about 8,500 entities are dealing with CKYCR currently. So all these 5 will enrich my record, they validate whatever they download, and if any update is there, they update. And why it was started, that customer should not be asked to submit the repeated documents, again and again the OVDs, PAN. So currently CKYCR is handling every day about 5 lakh records are being uploaded, which are not already there in that CKYCR. So you will be surprised, the country is opening at least onboarding 5 lakh customer every day. And 15 lakh records are being fetched every day. And around 7 lakhs currently. It was earlier 3 lakhs 1 year before when regulation was amended on 19th of July 2024. Updates were mandated to be uploaded in 7 days by PMLR and Reserve Bank also. Now updates have gone up to 7 lakh per day. And when a record is updated, the beauty of CKYCR is that that update is communicated to all the reporting entities which have relationship with that particular client. So like if I have 5 accounts in 5 different REs, all these 4 will get. The one which has updated will not get, but the other 4 will get that same update notification, and they are supposed to consume that update, upgrade their records. So this is the state of affair. As far as budget announcements are concerned, is that last year budget announcement, it was required to be upgraded. So CKYCR is under revamping phase. For deduplication, we are bringing photo match technology, AI-based photo match. This is one. We are bringing graded framework, that is every KYC record will be graded into 4 categories: declared, complied, enhanced and assured, based on the strength of the KYC. And strength we have a model actually, a model is developed which actually works on 3x4 matrix, that it analyzes demography, identity and contact on the strength, its validity, activity on that KYC and reinforcement by CERSAI. So when I say reinforcement means CERSAI in the revamped CKYCR is going to validate the documents which are uploaded by the RE directly from the document issuing authorities like Aadhaar, PAN, voter ID card, passport, driving license. We are already having permission for interfacing with these databases except voter ID, which is still under dialogue. So like that it is going to happen. So every KYC will be graded. So risk-based framework will come. So as Honorable FM had mentioned in the budget that it has to be risk-based, not one size fits all. And she also mentioned that it should be amenable to meet the need of digital India.
Absolutely. Absolutely. So, that's very critical actually.
Correct, sir. So using CKYCR, customer can be onboarded digitally. And very recently we have uploaded on our portal what should be the process. So this is the extent of implementation of CKYCR in last 8 years, and it is going to be upgraded. The upgraded version will be delivered next year somewhere around March, April.
Okay, one comment, maybe one comment before that. I think still there are issues, since you are the people who are responsible, for the NRIs to do digital KYC and get onboarded. I think that's an issue which has been flagged. The Financial Services Secretary was also told about this. I think that is something that you will have to think about how you can tackle. If you have a ready answer, please, before I ask Prashant to come in. But this is one issue which needs to be tackled. And the second thing is, I think we should have clear rules about the access to this, who can access. Because fortunately or unfortunately, there has been a bit of back and forth about who can use the Aadhaar data, who cannot use the Aadhaar data in our country, which particularly from a fintech space, which we are concentrating in this, there has been a bit of issue which came about. Maybe a quick comment before I ask
So
Prashant.
both the points I will make comments. So the issue is about NRI who are actually staying abroad, not in India. If NRI comes in India, VCP is there, digital onboarding. But for NRIs who are in abroad, currently due to IP spoofing and geofencing, the VCP is not allowed. So a pilot is going on with Aadhaar face authentication in the Bahrain, SBI is doing. I think and Passport has also agreed, and Immigration Bureau has also agreed in the last meeting recently held in DFS to share the data. Some developments are required, that is going on. This is one update. The second update is that who will access the Aadhaar data and who will not. Aadhaar has come out with SWIC rules very recently, and CERSAI under that SWIC rule was only enabled to get the Aadhaar, to access the Aadhaar, and all the even private entities are also, now can get access to Aadhaar, but there is a process, that process they have to follow.
My interest in suggesting that was these fintechs, once they start scaling up, then there is a change in the rule, then it becomes a bit of a problem. Prashant, quick comments.
I guess we are running short of time.
Yeah, just one more question.
I'll just give a quick comment. This whole CKYCR is a beautiful innovation, and in DOR we keep receiving applications from different companies, different stakeholders for access to Aadhaar also. But we should also try to understand that India is a very complex country, and the presence of multiple OVD is for a reason. So in a way, it is also a beautiful thing to have multiple OVDs, and it is not necessarily something that should be frowned upon. So in a way, if you see, what we need is the integration of all these OVDs. The final truth that we reach at should be a single truth. But we should not frown upon that the multiple truths that are existing. They are there for a reason, and every department and that there's this multiple for things that we have, they are there for a reason. So the final truth that we reach at should be integrated, and all should come at once. All should point towards the same truth. But at the same time, these OVDs are there to exist, and they should be allowed to coexist at the same time. So.
Spoken like a tax regulator. Thank you very much. All right. Let me take my final question. The regulation for customer and data protection often inhibit seamless innovation digitization is a complaint that I often hear. I have faced the situation in Reserve Bank of India. I'm not running away from this. I know the kind of problems we had when we implemented two-factor authentication or tokenization, etc. Today, with reference to this, there is increasing demand that, again, we must be able to balance, be it government or be it regulator, where we are able to take care of the customer protection. At the same time, the customer convenience should not be given a complete go-by. I also know that people are working on, there is something called ARIFAC, which is getting worked, and also yesterday, in the last monetary policy, governor talked about a platform where we are able to take care of the fraudulent transactions upfront, etc. So a quick thoughts on, maybe a couple of you can go, I leave it the choice to you. How do we achieve this balance, or are we doing anything towards achieving this?
So let me go first, sir. So as I mentioned, every KYC will be graded in 4 categories. The idea is to balance actually. So if you need a declared KYC, okay, you will get declared. If you need enhanced, you will get enhanced, and accordingly services and products will be mapped. That is the whole idea. And let me tell you, this revamp of CKYCR is only towards making it a perfect single source of truth, using this CCL model, which I said is statistical model. I think the risk-based approach is the best way to balance. So like RBI has also come out with recently that OTP, they have come out with principle-based regulation, which says that, to do away with OTP. Let me tell you, OTP will exist because there is a class of customer who will use only OTP going forward. People like us may go for tokenization, may go for some cryptography way of authentication, etc., etc. So this is how we have to balance depending on the class of the customer.
Okay, but just one comment would be that when we are intermingling this with inclusion, please remember that we are including people who have so far been excluded. So from a risk-based approach, to my mind, they carry zero risk, but if people think that they carry a huge risk, then there is a problem at the onboarding stage itself. I mean, just a comment. I don't want to further discussion on this because it can get quite controversial. But anybody else, Vasud, would like to?
This the thing that sir mentioned, risk-based approach. So I agree very much so. So of course, KYC can be simplified to a lot of extent when simpler, low-risk products are getting sold to customers. But the moment we start moving towards higher-risk products, then KYC will have to be more detailed. More than KYC, I would say CDD would have to be more detailed. If a person is using very risky product and he claims to be carrying out some business, the CDD should actually go into tax documents, revenue earned last in the previous years, etc., to really verify if a person, that a person or a business person or an entity really is doing what they claim to be doing. I think that is very important, and that for that purpose, CDD, risk-based CDD is really, really very crucial. Apart from this, I also believe that, as you mentioned, ARIFAC is a partnership of, private entities essentially. And a lot of information sharing, strategic information sharing can happen through private partnerships. So if there are any specific products which are getting misused in one particular organization, then that kind of information should ideally be shared across board with all reporting entities, so that their risk understanding of similar products gets updated and they can accordingly realign their KYC strategies. Also, if we are doing risk-based KYC, then there will, that entails some amount of standardization of products. And in a world where products are getting innovated so fast, this kind of standardization is would be very difficult to achieve. So there will have to be a dynamic approach to risk-based KYC as to which products are classified as risky products. And of course, the actual risk assessment of products will have to be really accurate and also dynamic. So I think that is what I would like to.
No, completely agree. Completely agree. I think the classic example, CDD translates to mis-selling, and the kind of agonizing that SEBI is going through presently in tackling the F&O segment and the retail participation and the losses is one classic example that perhaps on a different day we could discuss more about. I think we have absolutely run out of time. We have also have sort of suggestion that we should close it out, but maybe it will be fair to allow one question to be asked. If somebody wants to ask one question, I will allow that one question next 2 minutes, and then we wind up that session. Take the mic to him, please.
I'm an ex-banker. You said risk-based KYC. So, who's doing the risk assessment? Typically, in the regime which existed prior to the revamping of CKYC, my understanding is this risk assessment is being done by the banks. I'm quoting the banks as a financial intermediary to explain myself. So, typically, this risk assessment of low risk, medium risk, high risk customer resides within the bank today. Is it moving out of the bank to your institution? How is it playing out? I have not understood.
So,
Thank you.
KYC, let me divide into 3 parts: CIP, CDD plus ongoing transaction monitoring. So the banks which they do the risk assessment and classify, it is specific to the various reporting entity. I am mentioning reporting entities, not banks. There are many organizations who do the risk assessment, low, medium and high. That is their internal guideline that is based on the CDD plus the ongoing transaction monitoring. What we are going to do is at the customer onboarding time, that is CIP level, and it is dynamic. As mentioned by ma'am that it should be dynamic, it is dynamic. The moment there is an update, this will be daily, the score will be calculated daily, and it will be upgraded or downgraded like that. and then services and products will be mapped accordingly. However, while mapping the product and services, both the risk, the internal to the organization, that is RE, and the one which is provided by CKYCR, based on that, the decision will be taken by the concerned REs. Clear?
Clear. I just want to know offline the parameters of measuring risk by you.
So 3 by 4 parameters I told. The left side, that indicators are demography, identity and contact. The other side, the drivers are the strength. So strength of demography, strength of the identity, strength of the contact. Then validation, whether RE has validated from the document issuing authority or personally, like address verifications are done. The third is the activity. What are all the activities done on that KYC? And the fourth is that reinforcement which CERSAI will be doing. Because there are, many entities which cannot do Aadhaar biometric verification. Aadhaar OTP based. We will be directly verifying through interface Aadhaar from Aadhaar database. So that is reinforcement. So there is a layer of validation added by CERSAI over and above what RE has done. Right? So this 3 by 4 matrix, it gives one score. Based on that score, the 4 categorization will be there. That is declared, complied, assured, enhanced.
Okay, thank you very much. I think we have absolutely run out of time. On behalf of the GFF Advisory Council, I want to thank all my panel members for taking time and coming out here. Today, I know that getting into this venue has been a challenge, but I think we have to respect the security arrangements. So thank you once again for attending this session, and thanks to all my panel members.
Thank you to the panelists. I would request you to please come in front of the tables for a group photo. Ladies and gentlemen, a huge round of applause, please, for our incredible panel. Thank you so much for gracing us with your presence here at the Global Fintech Fest 2025.